Have you ever stared at a trading account with just a few $100s and wondered, what can I possibly achieve with this? Or felt your heart race as the price moves against you, each pip of loss cutting into your dreams of financial freedom? I've been there, starting with just $800, an old laptop, and a burning desire to change my life. But the market isn't a theme park. It's a brutal arena where only the disciplined and patient survive. In this article, I'll share a detailed, practical, and inspiring roadmap to transform a small account under $1,000 into the foundation for a sustainable trading career. No promises of getting rich quick, no secret formulas, just hard earned lessons from someone who hit rock bottom and got back up. Part 1. The right mindset. A small account is a forge for gold. The journey begins at zero. I started trading on a rainy evening, sitting in a 10 square meter rented room with a laptop that overheated like an oven and a shaky Wi Fi connection. My account held $800, scraped together from late night shifts at a coffee shop. I believed that if I studied enough indicators, watched enough videos, and traded diligently, I'd soon double or triple my account. Reality slapped me awake. Trading isn't a shortcut to financial freedom. It's a long journey demanding sharp thinking, iron discipline, and a heart resilient to emotional swings. The first time I placed a trade with just a point 0.1 lot, my hands were trembling, and sweat wouldn't stop. Each pip against me felt like a stab to the heart. Every red candle was a blow to my confidence. I spent hours glued to charts, praying for a big wave to skyrocket my account. But the wave never came, only a string of losses and the sinking feeling of watching my balance dwindle. I asked myself, is it because I'm poor that I can't succeed? A lesson from an unsung mentor. At my lowest point, with only $50 left in my account, I received a message from a former mentor who had quietly observed my struggles. He wrote, "You're using your small account as an excuse to dream big. A great trader doesn't care how much money they have. They care whether each dollar traded is worth it." Those 3 lines were a wake-up call, pulling me out of my gambling trance. I realized that a small account isn't a limitation. It's an advantage if you know how to use it. Why a small account is a forge for gold. With an account under $1,000, there's no room for error. Every trade is a test, every decision a lesson. A small capital forces you to be cautious. You can't afford reckless trades, as one big mistake could wipe out your account. Stay disciplined. You must learn to control emotions, avoiding the pull of greed or fear. Be selective. You only trade when the odds are high, rather than chasing every opportunity. I once met a trader who survived a year with just $300. He said, "I'm not rich, but I'm still here." In trading, survival is the real victory. That statement changed how I viewed a small account. It's not a barrier, it's a strict teacher, molding you into a better version of yourself. Part 2. Psychological traps and how to escape them. The trap of impatience. Statistics show that 90% of traders with small accounts exit the market within the first 6 months. It's not because they lack intelligence or effort, but because they fall into the deadliest psychological trap: impatience. With only $500 or $1,000, each pip of loss feels like a knife to your hopes. You're easily drawn into the get rich quick mindset. You see hot news and place a big trade, hoping for a windfall. You win a few $100s, get excited, and double your lot size. You lose a few $100s, panic, and trade frantically to recover. I fell into that spiral. Once, I risked 20% of my account on a single trade, thinking if I win this, everything will change. The result? I lost 40% of my account overnight. I wasn't a trader anymore. I had become a gambler in disguise. Emotions, the number one enemy. A small account amplifies every emotion. When the price moves up a few pips, you rush to trade, fearing you'll miss out. When a red candle appears, you panic and close early. When you're losing, you hold on, hoping the price will reverse. I used to stay up until 3 a.m., eyes glued to the charts, trying to take back what I'd lost. But the more I tried, the more I lost, because I wasn't trading on strategy. I was trading on emotion. Here's a harsh truth. The market doesn't care how much money you have or how stressed you are. It operates by its own rules. If you let emotions take the wheel, the market will crush you. Escaping the trap. View your small account as a ticket to entry. To break free from psychological traps, you need to reframe how you see your small account. Don't treat $1,000 as a lifeline because the fear of losing it will taint every decision. Instead, view it as a ticket to entry, a chance to learn how to survive and grow in the market. When you stop expecting to get rich quick, you'll start trading with a clear head and a steady heart. I used to compare myself to traders on social media who made tens of thousands of dollars a week. I thought, if they can do it, so can I. But I forgot they had years of experience, larger capital, and battle-tested systems. I had just $800 and an untested belief. The biggest mistake new traders make is wanting the results of veterans without embracing their process. Part 3. Trading strategies for a small account. Choosing the right trading style. One of the most common mistakes new traders make is copying someone else's style. You see someone scalping for quick profits, so you jump into scalping. You see another trader making big gains with swing trading, so you ditch scalping for swing. But have you ever asked yourself, what style actually suits me? Based on my experience, here are 3 trading styles ideal for accounts under $1,000. Selective scalping. Who it's for: those with time to monitor the market, quick reflexes, and high focus. How to do it: trade only during high liquidity sessions, like the US or London sessions, at strong price levels, support resistance, clear chart patterns. Aim for 1-2 high quality trades per session, avoiding random entries. Advantages: capitalizes on short-term price movements, suitable for small accounts as trades don't need to be held long. Risks: high spread costs and psychological pressure from constant monitoring. Focus on quality over quantity. Swing trading with trends. Who it's for: busy individuals who can only check charts 1 to 2 times a day. How to do it: analyze major trends on H4 or D1 timeframes, place trades with wider stop losses, and let the market run. Focus on currency pairs with clear trends and avoid sideways markets. Advantages: less time intensive, reduces psychological stress, ideal for full-time workers. Risks: requires patience and tolerance for temporary drawdowns during price corrections. Sniper entry. Who it's for: those who value precision and don't want to trade frequently. How to do it: watch the market like a sniper, trading only when you spot a clear opportunity. Familiar chart patterns, high risk-reward ratios. You might only take 1 to 3 trades a month, but each is meticulously planned. Advantages: saves on trading fees, reduces stress, and prioritizes quality. Risks: requires extreme patience, as you may wait weeks for the right setup. I currently use the sniper entry style because it aligns with my personality. I prefer precision and don't want to be caught in the market's constant pulse. I take 2-3 trades a month, but each one has a clear rationale and feels safe, even if it results in a loss. Capital management, your shield of protection. Capital management determines whether your small account survives. I once risked 10% of my account on a single trade, thinking just one big win. The result? I lost 50% of my account in a week. That painful lesson taught me: risk no more than 1 to 2% per trade. For a $1,000 account, each trade should risk only $10 to $20. This ensures you can weather a losing streak without blowing your account. Calculate lot size precisely. Use a position size calculator to determine the correct lot size based on your stop loss and risk level. For example, with a $1,000 account, 2% risk, $20, and a 30 pip stop loss, the system will calculate the appropriate lot size to stay within your risk limit. Cut losses quickly. Don't hold losing trades hoping for a reversal. Cutting losses protects your capital and mental state. I once held a 30% losing trade for 2 weeks, only to watch my account evaporate as the price kept going against me. Trade like a hedge fund, not a gambler. Losers burn through capital too fast to recover. Winners keep enough capital to fight another day when the market is clear. Simple but effective tools. You don't need a screen full of indicators or expensive software. Here are the tools I use to survive with a small account. TradingView. The free version is sufficient for analyzing support resistance zones, drawing trends, and finding entry points. Start with higher timeframes, H4, D1, to understand the market's flow. Then zoom to M15 or M5 for precise entries. Trading Journal. Record every trade, including entry time, reason, time frame, emotions before and after, and outcome. After a month, you'll spot bad habits, entering too early, holding losses, or trading when tired, and patterns that work for you. Price alerts. Set notifications at key price levels, support resistance, high liquidity zones. This prevents you from staring at charts all day, keeping your mind clear and avoiding impulsive trades. Risk calculator. Use an app or position size calculator to determine the correct lot size. This ensures scientific risk management instead of guesswork. I once used dozens of indicators, RSI, MACD, Ichimoku, but realized simplicity is key. A clean chart with a few carefully drawn price zones helps me make better decisions than a screen cluttered with colors. Part 4. The Dual Account Model, Learn and Survive. One of the biggest turning points in my trading journey was separating learning from earning. I used two accounts for distinct purposes. Learning account, $200 to $300. Dedicated to selective scalping, where I hone my skills in reading price action, reacting to the market, and spotting liquidity zones. Each trade is a real-world lesson, not about big profits, but about improving. This account is like a forge. The more you clash, the sharper you become. Survival account, $500 to $700, reserved for sniper entries, where I only trade when I see a familiar pattern with high odds. Every trade is backed by a detailed journal, clear reasoning, and an optimal risk-reward ratio. This account is like a clear lake. I protect it from emotional ripples. Splitting accounts helps me. Control emotions. The learning account lets me experiment without risking my main capital. The survival account keeps me focused on quality. Identify what works. I can see which strategies truly suit me, avoiding the confusion of mixing learning with earning. Protect capital. The survival account stays safe from impulsive experiments. I recommend opening a demo account for scalping practice and a small real account for testing sniper entries. Set clear rules. The learning account can make mistakes, but the survival account only trades when you're certain. This way you learn, survive, and don't crash. PIVE, the roadmap to success, from survival to triumph. Trading with a small account isn't a sprint, it's a long walk. Here's the detailed roadmap I followed, and you can too. Phase 1, survive and forge your mind, 6 months. Goal, avoid blowing your account. Learn to control emotions, find a suitable trading style, and build discipline. Actions, keep a detailed trading journal with entry reasons, emotions, and results. Risk only 1 to 2% per trade using a position size calculator. Stay out when the market is unclear. Silence is a smart trade. Success. If your account is still alive after 6 months, you've outlasted 80% of new traders. I lost 3 accounts in a row due to emotional trading. But when I started journaling and capping risk, my $800 account survived the first 6 months. That was my biggest win at the time. Phase 2. Build your system, 6 to 12 months. Goal, refine your strategy and develop a personalized trading system. Actions, identify the best trading hours, e.g. London session for EURUSD. Filter signals based on your criteria, chart patterns, supply-demand zones, risk-reward ratios. Choose 1-2 currency pairs that match your rhythm. I prefer EURUSD and XAUUSD for their liquidity. Success, you start trading with purpose, not reacting randomly to the market. During this phase, I realized I lost most when trading during low-volume hours, Asian session, or using too many indicators. Switching to the H4 timeframe and focusing on supply-demand zones stabilized my profits at 2 to 3% per month. Phase 3. Accumulate and grow 1 to 2 years. Goal. Build small, consistent profits and gain confidence. Actions. Maintain discipline, risking 1 to 2% per trade. Withdraw small profits, $50 to $100, to feel the reward. Add to your capital from external income, even if just $100 to $200 monthly. Success. Your account grows steadily, 3 to 5% per month, and you view trading as a serious profession. The first time I withdrew $100 from my account, it wasn't about the money. It was about knowing I did it right. That moment showed me trading is about building a sustainable system, not just making money. Phase 4. Scale and multiply, 3+ years. Goal. Expand your capital and create additional income streams from trading. Actions. Manage multiple accounts, use copy trading, or manage funds for investors. Share knowledge through blogs, YouTube, or mentoring new traders. Gradually scale capital from $1,000 to $3,000, then $10,000. Success. You're not just surviving, you're a professional trader with stable market income. I haven't reached millionaire status, but after 3 years, I grew my account from $8 to $5,000 and started managing a small investor's capital. The real victory isn't the money, it's becoming a trader who controls themselves. Part 6. Core Mindset. Discipline is your greatest asset. Don't chase secrets, build a system. I spent months searching for the holy grail strategy, perfect indicators, magical chart patterns, or $1,000 courses. The truth? There's no secret. What you need is a manageable system, a simple strategy that fits your time and personality, a clear mind. Don't trade when tired, frustrated, or emotionally charged. A patient heart. Know when to stay out when the market isn't clear. Silence is a smart move. Mistakes are assets. A losing trade isn't failure. It's a lesson if you're brave enough to review it. Every month, I spend an evening analyzing my trading journal. I found I often lost by entering too early or trading at unsuitable hours. Those mistakes didn't discourage me. They helped me improve. A small account is the most valuable school because it gives you no room for repeated errors. Trading is a profession, not a game. A doctor takes 10 years to wield a scalpel. An architect takes 6 years to design a house. So why think you can live off trading in just a few months? Treat trading as a respectable profession. Every trade is a step in your training. Every month is a milestone in your growth. Part 7. Final advice. You are not alone. I once sat in my tiny room, staring at a $50 account, wondering if I was cut out for trading. I slammed my fist against the wall, cursing my foolish trades. But those darkest days forged the trader I am today. I don't promise you'll turn $1,000 into $100,000 in a year, but I promise that if you stay disciplined, you'll outlast 90% of other traders. Remember, a small account isn't a limitation. It's a teacher that shows you how to survive and grow. Discipline is key. The winner isn't the one who makes the most money. It's the one who stays in the game the longest. You're not alone. Thousands of traders started like you, and a few survived to tell their stories. You're reading this, which means you still have faith, and that's your most precious asset. If you're ready to start your trading journey seriously, choose a reputable broker, open a small account, and begin with a fresh mindset. There's no need to rush or aim for big wins. As long as you keep your rhythm, you'll reach your destination.